This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Global diesel margins have slumped by about half since February, dragging on refiners' profits, as Russian exports continue despite sanctions, helping output from China and India reach all-time highs in March. Western sanctions and price caps on Russian crude and oil products introduced in December and February had been expected to tighten oil supplies globally. However, Russia continues to ship out low-cost oil, enabling its biggest clients, India and China, to boost their refining output and exports. Russian oil products, meanwhile, are being sent in high volumes to oil hubs to be stored and re-exported worldwide.
Oil retreated on Tuesday after 2 sessions of gains as uncertainty about the global economic outlook and a firmer dollar countered investor optimism about demand in China and expectations of a drop in U.S. crude inventories. The dollar rose as worries about corporate earnings and the global economic outlook deepened. A stronger dollar makes oil more expensive for buyers holding other currencies and tends to reflect reduced risk appetite among investors. A recovering dollar is weighing on sentiment, said Stephen Brennick of oil broker PVM. I suspect that upcoming macro releases concerning U.S. house prices and consumer confidence are also keeping buyers on the sidelines.
Moving on to the top news in the energy sector.
The European Union launched a scheme on Tuesday for European companies to place orders to jointly buy gas, with the aim of ensuring Europe has enough fuel and avoiding a repeat of last year's record high energy prices. Companies have until May 2nd to register how much gas they want to buy through the EU scheme, which will exclude Russian gas. The platform will then collect offers from global suppliers to match the company's demand. Matched suppliers and buyers will negotiate gas contracts. The EU will not be involved in these commercial talks.
EU countries on Tuesday gave the final approval to the biggest revamp to date of Europe's carbon market, which is set to make it more costly to pollute and sharpen the 27-member bloc's main tool for cutting carbon dioxide emissions. The world's first major carbon trading system has since 2005 forced power plants and factories to buy permits when they emit CO2, and has cut emissions from those sectors by 43%. European Union members approved a deal agreed last year by negotiators from EU countries and Parliament, to reform the carbon market to cut emissions by 62% from 2005 levels by 2030, which is designed to deliver the EU's emissions-cutting targets. Next, we have the top news in metal markets. Copper prices fell for a 5th consecutive day on Tuesday, reaching a 5-week low as Chinese demand remained weak and inventories in the London Metal Exchange, LME, warehouse system rose. Benchmark LME copper was down 2.1% at $8,551 a ton in official ring trading. The metal used in electrical wiring has fallen from a 7-month high of $9,550.50 in January. Behind the price weakness is a weaker-than-hoped rebound in demand from top consumer China and a gloomy economic outlook elsewhere.
China's gold production jumped 6.9% in the first quarter of 2023, recovering to pre-pandemic levels, partly spurred by a jump in demand for gold and jewelry as investors sought safe havens away from jittery financial markets. China's mined gold output rose 1.9% to 84.97 tons in the January to March quarter from the same period a year earlier, as capacity returned to pre-COVID-19 levels, with 78% of that from gold mines and the rest from non-ferrous byproducts, the China Gold Association said on Tuesday. Gold made from the imported raw materials rose 24.4% year-on-year to 29.9 tons in the quarter, contributing to a total output of 114.87 tons.
We will now look at the top news in the agricultural sector.
Turkey imposed a 130% import tariff of some grain imports including wheat and corn, according to a presidential decision published on Tuesday in the Official Gazette. The import duty comes after some European Union countries announced bans on grain imports from Ukraine last week. But some traders said Turkey's move is largely to protect its local agricultural sectors ahead of landmark May 14 elections. According to a previous regulation, there was no import tax on wheat, barley, rye, oat, corn and sorghum until April 30. With Tuesday's decision, which will take effect from May 1, a 130% import tariff will be imposed for grain imports. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.